Ask Abby, providing answers, insights, and education designed to give you the tools and knowledge you need to thrive financially and live confidently in retirement.
Back with another edition of Ask Abby, here with Abby Reed of the Reed Financial Group, the retirement family. Always questions for you, Abby. We turn to you as a resource for financial, investment, retirement planning, guidance, and answers. And we are in the midst of tax season, so tax-related questions on the minds of savers and investors. Those that have made charitable contributions, specifically that are meeting the requirements for minimum distributions. I know that there is some special language there, but a lot of them, as they are preparing their tax returns, have some questions about the tax coding and the tax documents that they've received. So these QCDs, or Qualified Charitable Distributions, a great opportunity, but some questions involved.
Yes. So this is a question that we've gotten several times now. And it's a good question because it is confusing. So just like many instances with taxes, it seems like it's more complicated than it needs to be. But as long as we know that in advance and know how to report these QCDs on our taxes, then everything is going to be good. And you're going to get the tax benefit that you plan to from this. So the first thing to know is QCDs can start at 70 and a half. Even though RMD age has qualified charitable distributions, that's what a QCD is. RMDs, required minimum distributions. We love our acronyms, and sometimes I just spit them out and people might not really know what that even means. So
yes, thank you. Thank you.
yeah, absolutely. So you can start making distributions from your IRA. So any time you take money out of an IRA, that's tax deferred. And so you're going to pay taxes on it. That's going to be fully taxable at your ordinary income rate. So the reason QCDs are beneficial at times is because if you direct that distribution after you turn 70 and a half, which is a random age too, but it is 70 and a half. You can just direct those distributions straight to a qualifying charity that can accept QCDs, and that's not taxable for your income. So it's basically kind of like invisible. It's not reported on, or it's not a part of your taxable income. So if you say it's $20,000, if you're already giving $20,000 to one of your favorite charities, but you're using money that's already been taxed, then you're giving in a non-tax advantageous way because the charity doesn't have to pay tax on it. You're not paying tax on it because it goes straight from a tax deferred place in your IRA or 401k or whatever, straight to the charity. So that's a tax-free distribution to the charity that's going to benefit both you as well as the charity.
Totally tax-free money there. I mean, you earned it and put it away without paying tax deductible contribution to an IRA or a 401k. It grew tax deferred. And now if we are charitably inclined and gifting it, we can gift it without paying tax on it ourselves or the charity.
Right. Yes, exactly. So that's tax-free. Charities obviously have really, really good tax benefits. And so they're not going to be taxed on it either. And it's a way to give even the same amount, maybe even a little bit more, because you don't have to pay taxes on it. So maybe you can bump up the contribution if you want to. But if you kind of flip the situation and say you are saving, you saved up $20,000 in a bank account from wages or whatever income sources. You've already paid tax on that $20,000, and then you give it to the charity. You're not even going to be able to write off most of that because the rules have changed. So that's not going to be a big tax benefit. Charity doesn't really matter to them because they're not going to pay tax on it either way. So really it's the tax benefit to the giver. And if there's a more tax advantageous way to give, then that's the route that we want to go, because first of all, it's going to be a benefit when tax time comes. And then secondly, you can give more. Taxes are one of our biggest expenses. So if we can reduce those in these seemingly small ways, but do it over a long period of time or in a couple different areas, that can really add up to quite a bit of savings in the long run. So QCDs can be a huge benefit to those that are charitably inclined. You don't have to wait until RMD age. You can start at 70 and a half. So if you're doing some tax planning as far as trying to get your IRA balance down a little bit, sounds a little counterintuitive because we're all obviously taught to increase that as much as possible. But RMD age starts to creep up, and then people really start to realize I have a lot of distributions I have to make, and it is going to be fully taxable. That means my Social Security taxes might go up, my, taxes on my pension are going to go up. Everything is going to be affected by that because your income is going to increase so much. So when we start doing some planning, and now is a window of opportunity because RMD age has been pushed back for a lot of different people. So directing some of that IRA money to charity brings that IRA balance down, or even doing Roth conversions, which we're doing a lot of those right now. So that reduces RMDs in the future, which again reduces taxes. And so it's kind of a domino effect of tax savings if it's done properly.
Saving more, keeping more of our money, or getting more of the money to the charity or organization that is special to us. Now, you mentioned reportability, and you paused there for a moment because there are some questions there for those that have made these kind of QCD charitable distributions and contributions of, okay, I gifted my RMD, now why is it still on my tax return, right? And how do we address that?
Yeah, so we got a question that was it's always a little bit panicked because there's this tax deadline, and then this was supposed to be a big tax benefit, and it's not reported correctly, and so it's sometimes a little bit frustrating. So, and I guarantee you, brokerages and custodians are getting hundreds of calls right now about people's 1099s being wrong because they did a QCD and it's being shown as fully taxable on their 1099. And so what we really want to talk about today is that is how it's supposed to be. There's no special box or code or anything like that for a 1099-R that's going to show the amount of your distribution that went to charity that qualified for the QCD. That's between you and your CPA or your EA or whoever you use to prepare your taxes, or the tax software that you use. And so the tax software is going to depend, but there should be a pretty straightforward way to report. Let's just use some kind of random numbers here. So I took out $30,000 from my IRA, 20,000 of that was a QCD, 10,000 of that was a distribution. You have to report that on your taxes. That's the only way the IRS is going to know that. And so what's a huge bummer is when somebody does a QCD and has this great plan and intends to get those tax savings, and then reports it as a regular distribution, because that's going to make it taxable. So you're still going to have to pay tax on that distribution. So
but that's what the form says. So we have to verify it behind the scenes ourselves.
Right. So the 1099-R is going to, like in that example, if $20,000 of the 30 went to for a QCD, went to a charity, it's still going to show as that's taxable income. That's a taxable distribution on your 1099. And so what a lot of people do is they call the custodian, the brokerage or whatever, and say, hey, you guys did this wrong. That part wasn't taxable. The custodian doesn't want any part of figuring out what's a QCD, what's not. They know, they might know that it went to a charity because the funds have to go directly to the charity, but they don't know if it qualifies as a QCD. So you have to verify that first. The charity that you're sending it to is eligible to accept QCDs. And then you have to have you have the responsibility to indicate on your tax return what portion of that was a QCD, what portion of that was a distribution. It's not as complicated as it seems. It's just knowing that ahead of time and making sure that you're reporting this correctly so that you can get the tax benefit that you're supposed to get.
So what is the documentation or verification of the claim that the QCD was properly made when we go to file?
Yeah. So on your 1040, what you're going to do is where you report those distributions, there's going to be, it depends on kind of what software you use or if you're using a CPA, but typically I think I was looking at TurboTax a couple of days ago and how they ask for you to report that. You report the distribution, and then there's a check mark or a box or something like that on the actual tax form or the electronic version of the tax form where it checks, you check the box. And then if you look at your tax return after, it'll say on the line QCD. So it just says that, and then the taxable amount is what's reported. And that's how you indicate that to the IRS correctly.
Abby, other than my word, any other proof or verification needed?
Yes. So something else that you need for your personal records, your personal file, is a receipt from the charity. So what you'll need is a written acknowledgement, is what the IRS calls it. And there's some form letters that you can use, or if the charity receives a lot of QCDs, they're going to give this to you anyways. Just make sure to ask for it and just keep it in your file. So it's going to say, this is the name of our charity. This is what we received. It's eligible as a QCD, something like that. And then also, one of the most important things is that there were no goods or services exchanged for this QCD. And you have to make sure that, especially large QCDs, the charity might want to give you something in exchange or throw you a lunch or a dinner or, something like that. You cannot receive any kind of goods or services in exchange for this QCD, or it loses its tax benefit. So they don't want any funny business going on. So it's important just to get that letter and make sure that you're not receiving anything of tangible value, essentially, in exchange for the QCD. So that's what you'll need for your records.
And then as well, I know that 401k and IRA rollovers have similar questions this time of year about what kind of forms they need to show documenting that it was indeed the rollover that is non-taxable, direct rollover to another type of account.
Right. So another important distinction there with a 1099, so same form, you're going to see on the form, it should indicate that was a rollover. Essentially, that means it went from one qualified account to another qualified account, meaning it's not taxable at all. Sometimes there's errors on those forms. So it's just important to make sure that when you are going through and reporting this information from your 1099, that you document on your tax return, or you communicate to your CPA that, hey, this was a rollover. It should be able to be reported on your tax return without having to redo the tax form, but you might want to have it redone. If it's not coded correctly, if it's not coded as a rollover, then the institution that generated the 1099, they can redo it and do it correctly. But you can also report it on your tax return as well as a rollover. And then you'll see, if you look at your tax return afterwards, you'll see it just says rollover there. On that line, and it indicates to the IRS, okay, this came out of a qualified account, but it went directly to a new one, so it's not a taxable event.
So these QCDs, Abby, sound like a great opportunity for those who are at or on the doorstep of RMD age, maybe don't need the income, don't want to pay the tax, or charitably inclined, and probably want to look at this as a real tax saving and efficiency strategy through those RMD years.
Yeah, it can be a very powerful strategy, especially for our clients that have a substantial amount of their wealth in these tax deferred accounts, and are charitably inclined, which most of them are. And so this is one of the ways to give the same, maybe even a little bit more, and just do it in a more tax efficient way. So, I'm all about, we all are about paying our fair share. We all have to pay taxes, but there's no reason to pay more than we have to. And these little things, the IRS isn't going to send us a letter and say, hey, don't forget about, thinking about doing some QCDs. They're not going to do that. They don't care. They want us to pay as much in taxes as possible. And so
that's what your
really
advisor
up to us. Yep, exactly. That's what we're for.
Yeah. By the way, if you have not heard about this or maybe had done it even and then had questions about how to properly document it and file the returns, you probably want to speak with a well-versed advisor in this area. And Abby, I know that you and your retirement family there, Reed Financial Group, all very well-versed in these strategies.
Yes, it's one of our specialties. So we've been a part of Ed Slott as well for a long time, and he is one of the best trainers. We think one of the best IRA experts probably in the world. I didn't know a CPA could be famous until I met Ed Slott, but he is. He's on PBS and he teaches a lot of these strategies. And so we've learned a lot from him. We stay on top of all of the different changes and the opportunities that those create. And so what we do when we review somebody's current situation is we look for opportunities. So we look for risks, of course, maybe some inefficiencies in their portfolio, but we also look for opportunities. And QCDs are just kind of the tip of the iceberg as far as the different strategies that can be utilized pretty easily to reduce the tax bill.
Well, PBS is a nonprofit too, so I'm sure they appreciate Ed Slott being there teaching about these kind of strategies that allow for tax savings. So Abby, always a pleasure. And I do want to remind you, ladies and gentlemen, if you have questions, if you would like to find out more, you can always go to the website, goaskabby.com, or give the Reed Financial Group and Abby Reed a call, 678-442-0255, 678-442-0255. Abby, again, always appreciate the time.
Thanks, Peter.
Here to answer your financial questions, visit the website goaskabby.com for show resources and to submit your questions and get answers, or to schedule your complimentary financial investment and retirement planning strategy session. You can also reach out to Abby directly at 678-442-0255. That's 678-442-0255, or at goaskabby.com.
Investment advisory services offered through Brookstone Capital Management, LLC, BCM, a registered investment advisor. BCM and Reed Financial Group are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Third-party ratings and recognitions are no guarantee of future investment success and do not ensure that a client or prospective client will experience a higher level of performance or results. These ratings should not be construed as an endorsement of the advisor by any client, nor are they representative of any one client's evaluation.